We are back on another brutal day for the markets. Tech is getting absolutely crushed today. Gold is skyrocketing. Crypto is pretty boring overall. We'll be discussing all of that, Tesla and Netflix earnings when they come out in the next half hour, and more today on Money Never Sleeps. Welcome back, everybody. As we get going, hit that like button, subscribe to our channel. Nothing that Kevin or I say is financial advice. We are not financial advisors, so please do your own research before making any buys or sells. Kev, we're closing up a volatile trading day here in the markets. NASDAQ got hit hard. It's under 15K. Dow is down over 350 points on the day, a little over 1%. The S&P is down about 1.5%. The VIX is on its way back up to 20. The US dollar is looking strong. Tech getting absolutely destroyed. My portfolio is just a sea of red at the moment. But you know what? When you're well positioned to withstand the volatility, it's really, and you've been through this before, it's really no sweat off your back. So I'm just chilling right now, my guy. How are you feeling about the markets today?
I'm doing great. You're an old pro. You started back in 2008, man. That's the worst possible time to be an investor, but also the best possible time. So I know
When you
you'll be
cut your
fine throughout
teeth
this.
during a financial crisis, you get kind of numb to things.
Exactly. And today, honestly, I didn't expect it to dip this much. I thought that we were going to see a lot of the price volatility swing into effect next week. Didn't think the market was going to crash. Market hasn't really crashed. It's just reversing what happened yesterday and the day prior. So this is no big deal in my opinion. I think that the markets are, as what we said last week, they're pretty even on the week. I think that we're going to see continuing, volatility from a lot of these companies as earnings do come back. We have Powell speaking tomorrow, which is going to be pretty important. I think once Biden gets back from Israel, that was a trip that looks like it's going to be cut short soon. I think a lot of the things that were living this, the news cycle pretty uncertain about what's going to happen globally are definitely going to start picking up. I think that right now what we're seeing is just a lot of uncertainty and people trying to get out of positions. Maybe people bought into this week and now they're trying to get out of it. But I think that right now the markets are kind of scared and uncertain. We're getting banks telling us to do one thing, and I think that a lot of people are doing the exact opposite. So it's a very volatile time, and I think that it's only going to be more volatile going into the next few weeks.
Yeah, we're seeing a lot of repricing as well around rate hike expectations. I'm seeing some people saying that they're now expecting 2 more rate hikes between, by the end of the first quarter of 2024, and that we're not going to see cuts until, Q3 of 2024. Get used to, these 5% interest rates. If you're not taking advantage of them for some allocation of your portfolio, I don't care how big or small, you're probably making a mistake. I've had, I've cash sitting in a savings account. I have some, bigger treasuries at 5.25%. So take advantage of it right now. Like, it's just, there's so much uncertainty still, and you're going to have access to this money. If you don't want to have it like locked up for a set duration of time, find some of these accounts that you can get, that 5% on, because it will add up over the coming year, because these rates are not going to be sub 5% anytime soon. We saw today mortgages for a 30-year fixed hit 8% for the first time since 2000. What the fuck? 30-year treasuries briefly went over 5% for the first time since July of 2007. Like, we're seeing some unprecedented numbers right here. Gold is taking a pump up today back to like 1950. There's so many things. I'm at 1950, the price, not to like the price back in the 1950s. So many things are returning to levels that we haven't seen since times of previous financial crises. That's not a great sign. I don't know, man. Like, history doesn't always repeat itself, but it fucking rhymes, and it's rhyming in a big way right now, and it is not a good one.
It's prime time, absolutely. I had to wear the Golden Knights jersey today just because obviously gold's
Well,
at 1950. They're 4-0. Couldn't be a better time for gold in the market and in my life. Again, I have no exposure to gold in any way possible, but it is something that we should be concerned about. I think that gold is a warning shot pretty much to all investors that we could be in a very crucial point in this market. A lot of people think that gold is a hedge against inflation. We saw that that was not true from inflation rising to roughly 10%. We saw that equities were actually the hedge against inflation in that scenario, obviously this year as well, right? So I think that right now with gold going up here, we need to be cautious because gold does dip right before we go into a recession and then it rallies all the way in because people are a little bit late to the party. But we're seeing it tick up here, and we did have gold pull back a pretty good amount earlier in the year. So this could be a very cautious place. I think people are obviously going into gold because they want to be risk off given what's going on globally. Again, a lot of issues both in Europe, Middle East, and also Africa at this point too, just to add. So I think that it's a good risk off thing that people are looking at. But if people are going risk off, that means that there's probably a lot less money that's going to be in markets, right? So we have risk off in both the aspect of money markets, and now we have risk off in the form of people buying into gold. Doesn't signal a good, it's not a good sign for equities, I think, in any way, right? So that's something we have to keep an eye on. And the last time we saw gold rally in insane amounts was in 2008, obviously, financial crisis, but then it also rallied a pretty good amount, I believe, if I'm not mistaken, in 2020 or going into 2020. So yeah, I mean, I think that we're in a really weird place. Obviously, stimulus brought the price of gold down, but I don't think we're having any type of quantitative easing anytime soon, given what the Fed's basis is for bringing inflation down. But we could see gold continue to go to all time highs, given if it keeps up on this trajectory. But right now, I don't see any signs of stopping in fears globally. So maybe this is the hedge.
the analysts who said on Monday to go risk on are looking real stupid real quick. I mean, just down across the board in tech, it is a bloodbath. I mean, Netflix filled the gap you had talked about, is down almost 3% today. Meta down a little over 2%, giving Nvidia back under 420, down about 4.5%. I mean, I'm just looking at this weekly for Nvidia, and I just want to thanks a lot, Biden. It's getting ugly out there. Tesla is down considerably on the week. And if you look at their monthly, it's the fourth red month in a row, and it's still very much overbought. So it is an ugly, ugly time. And we have earnings coming out here in about 22 minutes, I believe. Should be quarter past the hour. We'll get the Q3 earnings for Tesla. A lot of people are going to be looking at what are their margins like with this, cutting of prices they've had to remain more competitive in the EV market. What does that do to the bottom line? Like, there's a lot more questions with Tesla than there are answers right now. And that's why I just disagreed very strongly with the people who were like, we're going to see an earnings bull market. I just don't see it, man. I don't get it. Like, with these interest rates, how many people are really going out there and buying new cars? Like, is that a thing? And so I just think that maybe some of this stuff is just really off base, and I could definitely be wrong, but I don't think I am. I really don't. So we'll see how it plays out with the earnings, but why don't you talk about what you're seeing in the technicals?
Yeah, I mean, just Tesla. We'll take a look at this. And we'll take a look at Netflix prior to whatever the earnings come out, and then we'll look at some other stocks before the earnings pop up. But this is one big ABC correction that I'm seeing. Right here's wave A. We got the wave B. It's a 3-wave move up corrective. Right now we're in what should be a 5-wave move to the downside. This could be very. This could be in a play out a few ways. I think that this probably is going to be just a 5-wave move down, which means we got wave 1 here, wave 2. We need wave 3, which should be the biggest wave unless we get an extension with the wave 5. But I think this is going to take us below on the weekly, below the 50 moving average, which is roughly around $230. Obviously, that's not too far from where we currently are, given that we're down 4.5% today. And then we're probably going to have to test this 200 EMA, which is at 197. So that's, from where we are currently, that's a pretty good move. That's roughly, another 19% down from current price levels. But if we look at this on the daily, you can see that there is definitely some room for, this is the one thing I was wanted to point out. See this right here. we lost a pretty good level right now on this trend line. Usually this, once we tested it once, tested it twice, third time, lost it, see if it closes below that. But this looks like it's going to be testing the 200 EMA on the daily, which is around 233. On the weekly, that's close to that 230 level. We'll see if it bounces from there or if we just continue to start losing it. We maybe find support a little bit lower, maybe around 213. But yeah, Tesla is one that's, I think that is very, very frothy. I don't necessarily think that a lot of people are buying EVs, even though they probably have one of the most competitive you know, new vehicle purchases. You can get, Model 3, and then you still get that 7,500 tax credit, brings it down to roughly, I don't know, like 30 something thousand. It's pretty cheap compared to like Toyota and all these other new vehicles that you have to pay, 50, 40,000. So I think that even if they, with the price cut, I don't necessarily think people are just buying vehicles at this point. Right. So I think that there's definitely plenty of room to go down from here. If we look at the monthly is still extremely overbought on that stochastic RSI. I'll pull it up here. If I can get a hold of it, there we go. Monthly stochastic RSI is extremely overbought, right? We're currently sitting at 79 and 82. So it's coming out of the overbought. But again, that just shows you that there is a good amount to move down from here. And if we look at Tesla here, this is not necessarily a good indication because this is the bull market and bounced up. So even though it's overbought, doesn't mean that it can't crash to the levels, or it's not going to go as deep as we've seen back here. I think that right now, since there's not a lot of people purchasing, I think once a lot of these equities start going down in value, we've seen a lot of CEOs selling their own company stock. I think that we start to see Elon do that of some sort, or you start seeing a lot of other people just start selling Tesla, you're going to start seeing this rip pretty quick. So I necessarily am not bullish on Tesla by any means. I think that there is a lot of room to the downside, but I think there's a lot more room to the downside for Netflix. There's tons of gaps on this, right? So we're currently below the weekly 250 moving averages. We got a golden cross, and it looks like if we close this week below the 200, we're going to get a death cross on on Netflix on the weekly. So we'll be able to play that video. This gap right here between 346 and 340 needs to be filled. We're in it a little bit right now. Should go down a little bit more to 340 before we see any type of bounce, if we get a bounce. But just so you know, we also have another gap down here from 315 to 304. So there's a lot of gaps all the way down. We have more down here from 251 to 249. I think there was one more down here on the daily, but we won't get into it because we're just going to try and stay somewhat reasonable. If we do bounce anywhere, maybe we could bounce back up to the gap that we prior, where we found a little bit of support there that we finally broke through. That could be prior resistance. Turn that into resistance, which was prior support, and then maybe continue down to fill out some of these gaps. But I don't know. I think that's bad news is bad news. Earnings seasons, hasn't been great so far, despite however how many times these companies beat expectations. I mean, we pretty much just reversed everything. We're red on the week now for most major indices and stocks. Once these big
red on the week for the major indices,
as long as we keep seeing these big boys drop, everything else is going to drop with it. We talked about it yesterday. It's similar to Bitcoin dominance. These are the ones that held up the market for how long? 10 months or so. Well, they are also the ones that are probably going to drag it down too. So just something to keep in mind on that front before we get earnings. So that's what I got on that front. Let's see. Should we go into crypto for a little bit?
Let's do a little bit of crypto. We should have market's going to close here in a minute, and they'll give it a little bit of time, usually 15 minutes before earnings notes come out. So we will be keeping a close eye on that. So let's get into crypto for a little bit. Let's kind of keep this higher level because it's just boring out there, man. Like we're back in this range. October has still not happened. I guess for Bitcoin, it's still up a little bit on the month. It's Bitcoin is green on the month. ETH and alts, not so much. I'm curious what Solana. Solana is actually green on the month as well. So
that's a shit coin though. So
that is a shit coin. ETH is the one that's really getting beat up right now, which some people might view that as an opportunity. It's moving down on the longer time frames toward the oversold territory. It's oversold on the weekly. It's oversold. It's kind of middle of the road on the daily, kind of moving back up toward overbought. But yeah, I think there's room to the downside. I'm hoping to acquire more ETH at a lower price and then just kind of stand pat with my positions once we get to that point where I feel comfortable deploying capital again.
Definitely. Let's take a look at some of the liquidation levels for these because sometimes when you look at these charts and you know that we're not necessarily in a sound market, I don't believe we are by any means, that we should just need to look at where the liquidation lies for a lot of these coins, right? So we're currently priced for Bitcoin's 28,215. You can see that there's a lot of liquidity down south of here. So I wouldn't be surprised if we get on a little bit of a run where we just pretty much wipe everything out. We could also find a lot of people, going long, going short here a
Oh,
little
it
bit
looks
too,
like
right?
Netflix earnings are out. Scotch and Stock says it beat. I'm looking at the chart right now, and in the after hours, it's up almost 8%. So
Oh
are
my
those
goodness.
losses, and it bounced. Let's see, are Tesla's earnings out yet? No, there hasn't been much movement there.
I
So
told you guys.
while you're
I said,
talking, I'll go on the. You keep going with this. I'll go through and try to pull up the Q3 earnings here.
didn't I say we were going to go from and try and fill this gap that's up here? Literally 2 minutes ago. That's hilarious. All right, that's the way this market is. But let me just pull up what he caught. We'll go back to the crypto liquidations real quick. We're just going to take a look at where a lot of liquidity lies here. And obviously, Bitcoin, there's a lot of liquidity below. These are all people who went long. Their liquidation levels are down here. But there are going to be people who short a little too late. It's just going to build it up on this right side. And you can see that more liquidity, obviously, right now is wiping out the longs from probably that fake news article that's drawing all this pull down here. Eventually, this is going to fill up, and it's just going to be back and forth. That's the thing that I'm really concerned with crypto. I don't necessarily like when the market's like that, but it's liquidity hunting season. Obviously, keep an eye on Binance. I think that between them and OKX, they're the ones that are going to be moving the markets the most right now. But yeah, that's what I'm seeing on that end. And if we look at ETH looks like it's about to liquidate a lot of people down here, maybe to like 1540 or so. I mean, it could go a little bit further down, but there's also equally as much liquidity north of here to like 1660. So I'm not surprised if we're just ping ponging back and forth in this range for a period of time. We are extremely overbought on a lot of altcoins and Bitcoin. So the stochastic RSI does need to reset. But however, again, I think that liquidity is the issue. I'm seeing a lot of also Bitcoin ETH go onto the exchanges. I saw like 100 million of both assets go onto exchanges and being transferred from wallet to wallet. It's big money moving. We have to keep an eye on that because that eventually will affect price. Um, you don't move that type of money around in a bear market unless you're willing to sell it or if you're putting it on a hardware wallet. But it's not a hardware wallet that they're sending it to. It's to the exchange. So that kind of a bad sign. Sol, we'll just look at Solana because this is one that's been acting pretty weird, and I think has to do a lot with what's going on with FTX. There are a lot of people who like Sol. I'm not going to bash on them, but it's just the way price reacts sometimes. It's a little too volatile for me, and I can definitely see this wiping out a lot of longs and shorts here. Obviously, there's a pretty good gap between where we currently are and then where the top part of these short liquidations would lie, from $24 to 25.50 or so. But it looks like we're a lot closer to the long liquidations from the other day. I could see us taking out a good chunk of these and forming more liquidity in here as people try to short from here to go down here. It's probably going to just keep going back and forth. And we could just see this play back and forth for some time until the market decides to drop. People decide to drop. I think the only thing that's going to stop this liquidity hunting is if Bitcoin drops significantly here, where the exchanges don't have the room to be playing these liquidation games, and they have to pretty much prop up the price of certain assets to make sure that they're solvent. Because once Bitcoin starts dropping, I do anticipate that there is going to be a bit of a run on exchanges. It's just the way that we saw it back in 2020, both in June and also in November of 2022. So keep an eye on that. That's what I'm seeing with crypto. I don't want to get too much into the technicals because the technicals right now say we should be going down. However, the liquidations are going to be more important for the coming weeks, coming days at least.
All right, let me share my screen for the Netflix earnings real quick. We still don't have. Oof, that's bad.
Tesla fucked up.
Yeah,
Scotch and
that's
Smocks.
good.
Thanks for dropping that in the chat.
Netflix is looking pretty good. How's the sizing on this? I can go a little bit bigger.
That's great. That's perfect.
All right, cool. So we see Q3 revenue up almost 8% year over year. I think this is what people right here were looking at the most was global streaming paid memberships. We had that crackdown on password sharing, up almost 11% year over year. So that is a solid hit right there. And then also now that they're emphasizing like some of these lower monthly costs, but including ad with ad revenue as well, what that was going to look like. So with the global streaming paid net additions, 8.76. So yeah, I mean, really, really good earnings from Netflix. In the notes, they kind of commented on the writers and screen actors strike and how that's going to impact things and their plans for that. So I would say, I mean, obviously the market is responding favorably to this, and it looks like the numbers are clearly backing that up. I mean, this is really solid growth in revenue, really strong operating margin, net income, and the earnings per share come in, the highest they've been in quite a while. So, really good stuff here from Netflix. I think there's a lot of concern today because there was this report from, I believe, Piper Sandler about how like Gen Z favors like YouTube streaming to watching stuff on Netflix. And I think people may have overreacted a little bit to that, as well as just tech in general getting beat up. But it is bouncing back in a big way right now. And that is obviously very good for them. Why don't we anything else you want me to kind of scroll? This was the main data right here that I wanted to bring up. I
Yeah.
don't think there's a ton else for us to talk about. We can kind of look here. I'm kind of flying blind here when it comes to
No,
this
for
data.
sure. Just
But
came out. Yeah.
as far as like share of time on screens, like it looks like Netflix is right up there with YouTube. I haven't seen this pie chart before, but to see them, YouTube obviously is dominant, and then they're just so far ahead of Hulu and Disney Plus and Max and all that stuff as well. So really good stuff from Netflix. Like they did hell of an earnings. I think people will be obviously very happy. Tesla, it's weird, man. In the post market, they're now up. I don't understand what people are reading into the earnings now that has them feeling that way. I will try to see.
I'll tell you what it is.
Shareholder deck is out. I can pull that up now. Keep going.
It's really funny when I just think about Netflix. And again, I said that there's a good chance that we could bounce and try and touch higher. Obviously, we are post market going to probably go a little bit closer towards that gap, that range that we're talking about earlier on in the show. How long does this last? That's my question, right? Because great earnings, right? I'm not tearing down Netflix by any means, and they've been selling off into earnings. I think a lot of people, this is a bit of a squeeze here, if you ask me. That's why we're seeing it push up, because Netflix has been eating shit for 2-3 weeks now. But with Tesla, prices relatively, it's up 0.7%, 0.5% for in real time right now. And especially with how much they missed on the earnings. I don't know, man. I think this market is just kind of in this really weird state where if we really want to see what happens with the price action, we're going to have to wait till tomorrow in the markets to see how it reacts. I don't think any of the after hour stuff are necessarily anything that's going to be it's going to be there for the next coming days. I think it's going to be very different price action going into at least the weekly close.
Yeah, I'm looking here. I mean, their margin is once again down noticeably from last quarter, and man, their margin is down more than 50% from Q3 of last year. I don't think that is a good thing. When operating margin Q3 of last year was 17.2%, and now it's 7.6%, and it's been trending down each of the last 5 quarters. I don't view that as very good.
Yeah, Scotch and stocks, I agree. Tesla was weird, but it was expected. I don't think anybody really anticipated that Tesla was going to have good earnings, right? So this is kind of this isn't some major blow to Tesla or anyone's thoughts about what was going to happen from this earnings.
Yeah, I think they're pricing this in. This was getting priced in today. Absolutely. As part of why they were down almost 5% on the day. So maybe, and I think it could just kind of be like this for after hours, like in the pre-market tomorrow, of just being flat because people are like, all right, it was shit. We were expecting it to be shit. What now?
Look at this. Dude, what did I fucking say about Netflix? I said it was going to fucking fill that gap, it was going to go back to it and test it, and that's going to be our resistance. It's at 380 right now. The gap is right around 383. So I think tomorrow we're going to touch that shit. And I don't know if it's going to stay up. It's going to stay above the 200 EMA or if it's going to find resistance on the 50 EMA. but that's just a perfect range for it to test before it just breaks down to fill the rest of those gaps. I think this is a little bit of a fake out here with Netflix. Good earnings, don't get me wrong. I'm not saying anything bad about that, but market psychology, I think a lot of people are going to be getting risk off. Again, we talked about gold. We talked about a lot of how money markets have been doing really well for some of these banks as opposed to deposits. I don't see this being something that's going to be here for a week. I don't think Netflix's price is going to be in the 380s by next week. I think it'll be probably going down following a lot of other stocks, depending on how the major indices are playing out those given days. But there's a reason why the NASDAQ was going down today. I think that's something that we have to keep an eye on.
All right. So we got the earnings for Tesla. We got the earnings for Netflix. Anything else you want to cover today? I think we hit a lot of things in pretty short order there. Any other charts that you want to check out?
Nothing with the charts. I do just want to pull up this one article real quick. It's nothing crazy that we have to go into, but it just talks about some of the regional banks, their earnings they kicked off today. We got Northern Trust, we got U.S. Bancorp, Citizens Financial, M&T Bank. This is the regional banking. Ooh, fuck, wrong button. This is the regional banking index down here. We can see that that's down 2.59% today. So it was kind of mixed back and forth when it came to a lot of these earnings. I went through a good amount of them just to see how their balance sheets and everything looked. I think that there's something very scary going on here, and what they don't want to tell you, and it's very similar to what happened back in March of last year when we got First Republic, Signature, Silicon Valley. We had all those, those banking contagion events. It's not the smaller banks. I think the ones that are in extremely, extremely dire need of help, it's the bigger banks. And that's why we're seeing Bank of America reporting, massive losses. You're seeing a lot more of these, wealthy individuals, their deposits fleeing these banks. I looked through Ally, I looked through all of these today. I couldn't find anything significantly terrible. But when I looked at Schwab and I looked at Bank of America and I looked at PNC, I saw red flags instantly. So anyone telling you that it's a regional banking crisis, I think the regional banks are definitely going to get hit by this, but I don't believe one bit that these are the ones that are the problem here. I think the big problem is a lot of these bigger boys, and whether any of them go down, that remains to be seen. But I am not. I am short a few of these. I'm not going to be diving deep into a lot of these regional banks. Trying to throw everything against the wall and hope something sticks. I think that's a lot of these are just going to be. Maybe they survive, maybe they fall out because other banks and they're exposed to that. But I don't see the problem being the regional banks right here, and that might be a controversial take given what other people on CNBC and Bloomberg are saying here.
All right. I think that is how we're going to wrap it up for today. Kevin, I will be back tomorrow at our usual time. If you've not yet, do us a favor, hit that like button, subscribe to the channel, drop a comment in there. Anything that you can to help us with the algo is appreciated. And if you really want to, and do us a huge solid, sharing anything that you like that we talk about out on social media is gigantic. So thank you, everybody, for watching. Hope you're staying safe in the markets. Have a great rest of your day, and we will see you tomorrow.
Take care, everyone.